Peace. Welcome back to the channel. So I wanted to hit on a trending topic within the trading space. So let's talk about futures versus options, right? What is futures like? For me personally, I have my own take on it, right? I personally think that learning both would be optimal, right? But I'm starting off with futures personally, okay? But let's learn a bit more. And I'm actually learning too as I go. So I'm not coming to you as someone telling you which one is the best. I'm actually learning both myself. All right. So I went to a search engine and typed in futures versus options. So let's read some of this and let's see out of these differences, like which would we choose, right? So let's start with how they explain the differences. So, futures and options are both financial derivatives that allow investors to speculate on or hedge against the price movements of underlying class of assets, However, they have distinct differences in their structure, risk profiles, and usage, right? So, key differences. You have obligation versus option. So, in the futures market, the holder of a futures contract is obligated to buy or sell the underlying asset at a predetermined future date and price. This means that if you hold a futures contract at expiration, you must fulfill the contract, right? Now, for options, the holder of an options contract has the right, but not the obligation to buy or sell the underlying asset at a specific price by a certain date. This provides more flexibility as you can choose not to exercise the option if it is not advantageous, right? So already with this one, I would go with options, right? And then we're going to weigh out which one, futures versus options, at the end, right? So underlying asset. For the futures market, futures contracts can be based on a variety of assets, including physical commodities like wheat, corn, or oil, financial instruments like bonds or stocks, and indices like S&P 500. For options, they're typically based on financial instruments such as stocks, bonds, and indices, but they can also be based on futures contracts, right? So for this, I would prefer, because it's giving me, a little bit more like wheat, corn. It's giving me more assets. So I would want to go with futures on this one. So we started off, I wanted to do for obligation versus option, we'll do options, underlying assets, futures. So what about settlement? Futures are settled daily, meaning the buyer or seller may be required to put up more cash if their equity falls below margin requirements. This is also known as mark to market. All right. Now, options, the holders are not required to settle up until the option expires. The value of the option is settled at expiration, and the option ceases to exist. Right. So one is your goes back to basically being obligated, right? Um, like we're required to put up more cash if the equity falls below margin requirements, but for options, the holders are not required to settle up until the option expired. So it seems a bit more flexible. I still have to get some more context on this, so I would go with options. So right now we have options, then futures, and then options. Okay. So for leverage, let's see. In the futures market, it involves sustainable leverage, allowing traders to control a large position with a relatively small amount of capital, right? This can lead to high potential returns or losses. Options allow Options also involve leverage, but the downside risk for buyers is capped by the premium paid. However, some naked options can involve unlimited risk to the upside. I'm already going to go with futures on this one because I don't know what this even means right now. Okay? So where we're at options, futures, options, futures. Pricing and complexity. So where we at? Okay. Futures pricing is straightforward and driven by the price of the underlying asset. The price closely tracks the asset, making futures easier to value, while options pricing is more complex and involves multiple factors such as the price of the underlying asset, time to expiration, volatility, and interest rates. This complexity can make options more challenging to value and trade. Going to futures. So options, futures, options, futures, futures. Expiration. So futures contracts have a specific expiration date, and the holder must fulfill the contract if held until expiration. Options also have expiration dates, but the holder has the option to exercise the contract or let it expire worthless. So I would choose options on that. Okay. So options, futures, options, futures, futures, options, right? So trading hours. Trading hours for the futures market offer almost 24-hour trading except weekends, allowing traders to react to news and market movements quickly. Options. Options trading is typically limited to regular market hours, right? Which can be a disadvantage for traders who want to react to news outside of these hours. So I would choose futures, right? Regulations and costs. Futures trading generally has lower initial account opening capital requirements and lower commissions, making it more accessible to new traders. Options trading can have higher costs due to wider bid ask spreads and higher commissions. Additionally, day trading options requires a minimum account balance of $25,000, which can be a high barrier for new traders. So I will go with futures. So if we're tallying up, so options is 1, futures is 1, options for this one as well, futures for this as well, futures for this as well. So I went with futures 1, 2, 3, 4, 5. So 5 out of 8 because I chose options 1. Oh no, sorry. Options for this 1, right? 2 and 3, right? So for me, futures, just by reading this, right? And maybe I'm off on whatever, but I know I chose futures more than options. At first, it was neck and neck. Just by reading this, I chose futures. Okay. Now, this is based on my situation, my circumstances, my bank account, my life, right? And some of the options, it just seems a little bit more complex. And considering that I came from Forex, right? I started this game in Forex, right? So this is why I will stick with futures. However, when I get to the point where this 25K is nothing for me to put in an account, I will start to get into options. Now you have people that say options is better, Because, or trading stocks in general is better, because I'm still a little confused on the stocks aspect. But if we're talking just futures and options, people say options are better because it is um, inefficient versus efficient. So, for instance, let me see. Nope, I don't have. But what I do have is this. So, if you're talking about an efficient or inefficient market, right? So you have that would be an efficient market. Okay, so they're saying that this versus that, it's not that good. This is inefficient and this is efficient, right? So this market is Forex and futures, but options is like this, right? You got way more chances, way bigger moves, right? And that's what people are saying. So for me, because I'm already in futures and I'm not about to keep jumping back and forth, right? I'm just going to learn futures, master futures, and then learn options when, when I'm good at futures. Because price is price is price, right? The way that I'm learning to trade, um, I do believe it'll work in all markets. Now, I have to adjust? Absolutely. But if I'm learning price, I'm learning. I'm a volatility trader, and I'm understanding what moves the markets, and I'm able to track liquidity. I could trade in futures versus options. So, and that's my take. Peace.